Hello again, everyone. In this technical analysis of the stock market video, I call it risk on because that is what the market is telling us. We'll take a look at the Nasdaq Composite on a daily and weekly charts here. Take a look at the high yield bond fund. The dollar continues to push higher, continues to break out to the upside, and oil, has it turned? Has it peaked? Let's start off and take a look at the Nasdaq on a weekly chart. We've closed at a new all-time weekly high in here, closing high. And I'm looking at this from a possible flat standpoint, an A, B, C flat for an intermediate wave 4. And then, of course, you know, once you complete an intermediate wave 4, we'd be off and running for the final intermediate wave 5. So, and why is this, you know, playing out like this? It's because this move to the downside, this wave A, ended up being a three-wave move. Okay, well, you don't start a bear cycle to the downside with 3 waves. You start with 5 waves. And we kept thinking we were going to get 5, but we never got it. We got 3. Now we're pushing back strong up in here. Now, let's take a look at B versus A. Okay, so here is where B would equal A in terms of 100%, where the equality, that's right about where we closed this week. A little bit higher, actually. And the next threshold that I'd be looking for is 127% of A. So in my mind, as we continue to push higher, and we'll look at the daily in a minute, this would be my next target. Let's go ahead and look at that daily chart. So here's what we're looking at. And, you know, we just talked about B versus A. So here's that 100% level. Here's the 127% level. So now let's look within B. Within B, I'm expecting B to be a 3-wave cycle too, okay? Structure. So A, B, and C. Now, when you have a zigzag like this, you're looking for a 5-wave and a 5-wave in terms of A and C. Now, C could be an impulsive. It could be a diagonal of some kind. Right now, it looks impulsive. And right now, it doesn't look like this, you know, 1, 2, 3, 4, 5. It doesn't look like 3 is complete yet. It's possible. So let's look at 3 versus 1. Here's what I'm looking at in here. I'm looking at the third minuet level wave structure. And that's 1 wave degree below the minute level in here, okay? So you come on down. It's really pretty simple. I mean, the B wave is a minor wave, and then you've got minute, and then you got minuet, and it's just labeling names for the different wave degrees. So now we're down in here. We're looking at 3 versus 1. And a 3 versus 1, here's where 100% would be. That's right about where we're at. So is it possible that the 3-wave completes itself, has completed in here in terms of the push, and now we're going sideways in a wave 4? That is possible. But it continues to act like it wants to push higher. And if it continues to push higher, I would expect a normal length wave 3 to be up here around 84.62. And then we get a pullback in a wave 4, okay? So that's what I'm kind of looking for, and then we continue to push higher in a B. So you watch to see, do we continue to chop sideways? You know, we had a very strong pullback for wave 2, so wave 4, I'm expecting to be a sideways type move, okay? If we continue to push higher, this is what I'd be looking for. So that's the structure on the Nasdaq Composite. That's what's going on right now. We are clearly sitting up here in new all-time high territory, and especially in closing high territory. Let's take a look at the high yield bond fund. Now, HYG continues to tell us risk on. Investors are basically saying, you know, they're not running from the risk. They're just continue to trend to the high side, continue to push, continue to ride above that 10-day moving average. We got a little bit of pullback here at the beginning of the week, and then that was about it. And then we just continue to push slightly higher sideways Wednesday and Thursday. And then Friday, look at this nice big strong move that we just had on Friday. Now, it's not a huge candle, but it closed right on its high. So that's the picture we're getting from HYG. Continues to say risk on for the stock market. Let's take a look at the dollar index. Now, I've been looking for this dollar index to continue pushing now for several weeks, and it is taking its time. And in my account, I've got it as a primary wave 3 within a cycle wave 3. So looking for this to push higher. Finally, it broke up in here, and it broke above that 97.71 level. Why am I talking about 97.71? Because that was, here's the high right here was 97.69. The high, 97.71. The high, 97.71. We broke above that level. It confirmed in my mind that yes, we continue to push up in a cycle wave move here. We're in intermediate wave 3. Actually, I've still got us as minor wave 3 of intermediate wave 3 of primary wave 3. So this needs to continue to act strong, and so far here over the last 2 weeks, it started to act a little more like a wave 3. So where would be the target? Up here, a normal length wave 3 would take it up into the very close to 100, but 99.68 would be the initial target. Equality would be 98.55. Okay, so that would be the first short-term target, but I would really expect it to push much higher than that. So that's the dollar. Let's take a look at oil. Okay, West Texas Intermediate dropped over $2 a barrel on Friday, and you could see USO was down 44 cents. Pretty good little whack here. I think there's a real good chance that the fifth wave up here as a part of the fifth wave of the C wave, which would complete this primary wave 2 counter trend, I think there's a good chance that this is all completed with the high that occurred back here on, when was that, Tuesday, April 23rd. So, you know, we got a little bit of a break of this trend line here on Friday. We got a break of this this low, last week's low. And so we'll see whether we get some continuation or not. But right now, that's a real possibility. The other possibility is that this is, instead of 5, it's 3. And that we're doing a fourth wave right now. But this would be my preferred. This is where I'm leaning in, primarily because of how deep we've retraced. When you look at 2 versus 1, we're well above 61.8%. We didn't get to 78.6. We're right in the middle of that zone, okay? And in terms of C versus A, in terms of this structure in here, we're just slightly above where C equals A. So it's a perfect place for this whole wave structure to end. And then what are we talking about? We're talking about a new wave to the downside that should be a third primary wave within this last fifth cycle wave. And here's the bigger picture. Here's what I'm talking about. And let me zoom out. Okay, so this is the picture I've got on USO. And these are just placeholders right now until we get to confirm that we got a wave 2 down, and then we'll do a little bit more accurate projections. Okay, if you felt like that video was helpful, remember to hit the like button and subscribe to this YouTube channel. If you could think of one person who'd benefit from the video, share the video with them. And if you want to get more insight, trade ideas, become an insider member. Head on over to joehenches.net. Check out the membership here. You can also sign up for free market update videos that come out twice a week. All right, that's it for this weekend. Everybody have a wonderful weekend. We'll talk to you on the next video.